Donald Trump wins a second time, and the Feds have already decided that they'll cut the interest rates by another 0.25%. That's what everybody is talking about right now. But why is this important to Canadians? With how close the US and Canada's economic relationship is, Canadians will actually be affected in many ways, so this could directly impact our wallets. The first major thing you have to know is trades and tariffs. Trump has promised to impose massive broad tariffs of 10% on everything. And of course, this impacts Canada as well. About 75% of Canada's exports go to the US. So this would definitely have an impact on Canada's economy because it will slow down growth and also affect jobs in the export-driven industries. And depending on how severe the tariffs are, Canadians will see lower profits, and the cost may eventually be passed down to the consumers from price increases. And this leads to number 2, the stock market. First of all, the Canadian stock market, or the TSX, is a commodities-heavy market. And why this is important is because tariffs will greatly impact the sectors such as manufacturing, energy, and materials. And in terms of the US stock market, it has been soaring after Trump's victory. And that's because people are already feeling optimistic about the stock market because of his pro-growth policies. And with him winning again, this also means that there's going to be more tax reliefs for US corporations, which will boost corporate earnings, particularly for sectors in the tech industry, manufacturing, and energy. And whenever people say the stock market, they're generally referring to the S&P 500 index, because for most people, the majority of their investment is diversified into the US stock market. S&P 500 has almost doubled in the last 5 years, and those returns are not normal at all. The long-term historical return for S&P 500 is around 9 to 12%. But in the last 5 years, the average return we're seeing is 14% a year. The massive growth we're seeing here is mainly because of the Magnificent Seven, which includes the 7 tech stocks of Microsoft, Apple, Alphabet, Amazon, Meta, Nvidia, and Tesla. And when we compare the growth of these Magnificent Seven compared to the other 493 companies in S&P 500, we can see that the majority of the growth came from the Magnificent Seven. In fact, if we take a closer look, we can see that almost 70% of the stocks inside the S&P 500 are actually underperforming compared to the index. So the question is, will the growth continue into the future? Now, according to the analysts at investment banks and also the asset management firms, the answer is no, because the valuations right now is the highest compared to its earnings. And historically, this means that the stock market returns that we're going to see in the next 10 years is not going to be as good. Goldman Sachs predicts the annual return for the next 10 years is 3%. And Vanguard predicts it's going to be 3 to 5%. BlackRock thinks it's going to be 5.2%. And Schwab predicts it's going to be 6.2% a year for the next 10 years. That's quite a big range for these different companies. But what we can conclude here is, while Trump winning will boost the growth of tech stocks, we probably shouldn't expect the market to have similar returns compared to the last 5 years. And at the end of the day, nobody has a crystal ball. So what we should really do is to focus on things that we can control. Not predicting the future, not trying to time the market, but just continue to save and invest with a good diversification on a consistent basis. Because the best time to invest is 50 years ago, and the next best time to invest is today. Number 3 is inflation. With a combination of a weak Canadian economy and Trump's winning the election, this will likely push the USD to be even more expensive. This means the value of the Canadian dollar is going to be reduced relatively. And this will increase the cost of imported goods such as electronics and foods that are priced in the US. So Canadians may start seeing some price increases as well. And of course, it'll also affect Canadians who enjoy traveling to the States or making purchases in the US, because the cost now is going to be more expensive due to the weaker Canadian dollar. With Trump winning, there's now more risk to the Canadian mortgage rates. First, we need to understand that there's 2 types of Canadian mortgage rates. First is the variable rate, and these rates are impacted by the Bank of Canada and its target rates. The second is the fixed rates, and the fixed rates are mostly based on the 5-year Government of Canada bond rates. So it sounds like we shouldn't be affected by the US interest rates, right? Well, not exactly. Because the 5-year Government of Canada bond rates generally follows the 10-year US Treasury bond rates, which of course is impacted by the federal interest rates. Currently, this is the forecast of what the variable and the fixed rates will be looking like for Canada in the next 5 years. Looking at this, it's likely that the variable interest rates will hit the point that it's going to be lower than the 5-year fixed rates in the next 6 months to a year. And moving forward to the next 5 years, we're expecting the variable rates to be generally lower compared to the 5-year fixed rates. Basically, there's going to be less downward pressure on the rates compared to before and more upward pressure on the fixed interest rates. But overall, we can still expect more interest rate cuts, but probably not at the same pace as what we've been seeing before. Now, the rates shown here is the highest mortgage rate you could get. So if you have good income and also good credit, then you should be able to get better rates than what you're seeing here. And remember, as with all projections, take it with a grain of salt when using it to make decisions. And this leads me to the last thing you have to know, and that is you have to stop focusing your efforts on trying to predict the future when there are things that you should actually be focusing on that is within your control. Click here to learn the hidden ways to reduce taxes legally in Canada.